Hello and welcome everybody to a new educational video. We're going to be talking about high probability trades and elements to a trade setup. And we're going to outline some trades we took with our private Discord, which we actually call beforehand, unlike a lot of hindsight traders. So let's go to the next slide. And what makes a setup worth taking, right? We have to go through a checklist. So first of all, smart money trades on a monthly, weekly and daily time frame. So selecting trade setups on a higher time frame chart is the foundation to profitability. Now, with those higher time frame key levels relative to premium and discount that align with institutional order flow is the key. And how do we know that smart money is active in the market? We have to look for that SMT, right? That crack in correlation between two assets. Now, once we establish the higher time frame, right, we have to lower our risk on the trades by using these 3 points. So we're focusing as first of all on that higher time frame, and then we only long from a discount level and we only short from a premium level. Now, once we have that higher time frame narrative, we transpose to the lower time frame charts and find the best entry. We'll be using the opening price, a key level, into a stop hunt with SMT, and then the change in the stated delivery will be the foundation to this trade idea. So over here we've got a DXY monthly chart, right? First of all, we need to determine what is the higher time frame direction, right? So determine your market profile first of all. Are we bearish? Are we bullish, or are we consolidating, right? Now we can clearly see we are in bullish order flow on DXY on the monthly time frame. So next, we'll draw out our premium discount of the range, right? We have our discount low down here up until this premium high up here, and now we know what level is discount and what level is premium. Everything below that 0.5 is discount and everything above it is premium, right? So now that we have established our premium and discount level, we can see this fair value gap over here, this monthly fair value gap, and we can see price dips into it multiple times, but still respecting it with the bodies, and we can see it trades away from here after this swing low has been formed. Now we're going to be focusing on this candle, and this is actually the low of the week we've called in our Discord group. So we're going to be breaking down why is this the low. Here's the slide of the Discord, right? The MMXM trader outlined this is the key level we'll be waiting for after NFP, and then the anticipation is that we're not going to trade lower than this key level, and we're going to outline why this is such a high probability area for a long. Now let's go back to our checklist and see how and why we call this trade idea. Right, so we know we need to focus on that monthly, weekly and daily time frame, because setting up the higher time frame charts is the foundation to profitability. We need that high time frame key level, right, relative to the premium and discount, and this will align with institutional order flow, and then we have to spot that SMT. Now you can use order pairing technique to frame those buy to sell stops or frame those sell to buy stops within that key level. So number one, selecting trades based on the higher time frame chart, right? We know we are bullish on the higher time frame. Now step number two, we need a key level relative to the premium and discount. We have a weekly order block over here, and it is in discount, so we don't want to see this in premium, we want to see this in discount. It has to be relative to that premium and discount level, and it needs to be aligned with higher time frame order flow, which is bullish, right? So step number three, we look for that SMT. We have SMT from this low to this low. So GBP USD took out its high while DXY did not take out its low. That is the crack in correlation inside that key level. And then the real source, right? That liquidity pool that is just above that key level makes it even better to pair up the sell stops that are resting below it. And then we want to pair those sell stops up with the buy stops above here. So now that we have determined and established our higher time frame context, we need to transpose that higher time frame to the lower time frame charts to lower down our risk. We need to utilize the power of 3. Then we're going to use that higher time frame key level, and we'll be using a lower time frame range low to high, which is in that order pairing I just talked about, and then we'll try to find our optimal trade entry or OTE. Now think about the checklist, right? We need to use the higher time frame context and put it down into a lower time frame chart. So we have this inducement range low, right? So we want to pair up the sell stops that are resting here with the buy stops resting up higher. So what do we need? We need a key level, right? And SMT, and that will be high probability for a smart money reversal. So if you look at this range we have, right, this sell stops down here and buy stops above here. So outlining that monthly opening price and the weekly opening price. With the monthly, that weekly time frame dipped into that key level, that discount order block, right? So we're pairing up the sell stops below this range low, and now we want to pair it up with the buy stops above this range high. Now using the weekly opening price, and we're utilizing the opening price for that power of 3, right? We want to see it manipulate down into discount first before the real move into the buy stops happen. So we can see that over here we're inducing resistance over here, right? Because we're leaving a relative equal highs. Now with those relative equal highs, we have a nice buy stop pull above it. Price dips back down into discount and then expands higher. But what do we need in that discount level, right? We need a key level. So this is a 4-hour chart, so now we have this 4-hour breaker over here, which is our key level to continue up higher. Just like we had that weekly order block, right? That is the key level, and now we have a 4-hour key level over here. So we're transposing the higher time frame down to the lower time frame. Another slide here of the Discord, the call out, right? We called out the daily breaker, that is the key level. We want to see price go down from here, right? Just like I outlined in the previous slide, we need to have a key level, and price eventually went lower from this area, obviously. Now if we zoom in a little bit more on this chart, right? What do we have? Think about the sequence, right? To use the opening price for the power of 3, we need to hit a key level, see a stop hunt with SMT, and then a change in the state of delivery is the foundation to this trade idea. So we can see over here the buy stops got rated, right? Then we're leaving behind a premium order block. Price breaks down lower, leaving behind a breaker, right? So a premium level breaker. Price comes back into it after the weekly opening, hitting that key level, and then we had that SMT formed, and then we can see price trading down lower from that area. Now from that higher time frame key level, we want to transpose it to the lower time frame chart, right? So we have a 1-hour chart over here. Again, price runs back up higher from that weekly opening price here, right, into a key level. We're taking also all these buy stops above here, so we're doing a stop hunt. Now we're forming SMT on the highs over here into that key level, and then price breaks down lower and target that sell stop liquidity pool. Another slide of the Discord, of course, no hindsight at all, that's how we roll over there. So over here we've got USD CAD as an example, right? Over here continuing with the same buys, bullish DXY, and then we have our eyes on USD CAD because all the other dollar pairs were overextended, but USD CAD was still resting in discount, so that makes it for a higher probability move up, right? I'm going to outline why this run was enough. So there was a little liquidity run over here. So same approach again, right? Opening price into a key level, want to see a stop hunt with SMT, and then the change in the state of delivery is the foundation for that trade setup. So over here we've got that 15-minute chart, and I'm going to outline why was this little stop hunt enough, right, for that entire sequence to trade up higher. First of all, we want to pair up those sell stops with the buy stops, right? Think about order pairing. We start off with the opening price, New York midnight open, 12 a.m. EST. We want to see it manipulate lower, right? For that power of 3, manipulation and then an expansion up higher. Now, we did a little stop hunt here. And why was this stop hunt enough? This was SMT with DXY. So DXY did not take out this range low while USD CAD did, and then it broke up higher, right? Market structure shift over here, then we have a change in the state of delivery, and we can use this order block as a key level. Just like we saw on the DXY weekly chart, right? With that weekly order block, price dips into it and takes out sell stops on the way. You can see that here as well. We have this short-term low with sell stops resting below it just before that key level, right? So price dips back into that key level. This is inducement, right? So sellers get trapped, price trades up higher, closing above this one, makes it for a high probability order block as well. Price dips back into that high probability order block and then starts to expand higher. And we can see down close candles are respected for a continuation up, and eventually we paired up those sell stops with the buy stops above this range. I hope you enjoyed this video and you learned something, guys. Make sure to like and subscribe as always for future content, and I will see you guys in the next video.